Okay, basically he's asking if we're putting 5% of our portfolio into altcoins or each altcoin with each investment during a bull market, what happens when the bull market is over, basically, right? Do we plan to hold? Do we plan to sell and then buy the dip? That's a question that would vary for each investor, right? That's obviously a very personal question. For me, honestly, I don't know, right? I would say initially my plan would be to hold, right? Because I've learned from the last bull run, good projects always bounce back, right? Like for me, my plan right now with Helium Network, I'm not selling anytime soon. That might seem crazy, but I I'm so bullish on that project since day one that if anything, I wish I could have bought more, right? Because I've been trumping Helium since the beginning, and now seeing how accurate that's been, if I could have gone back and double it down and trip it down, that could have been the entire investment for the whole year, right? Helium basically made the whole year, right? Because if we go to Helium, let me pull that up actually. Give me 1 second. This is kind of the perspective I have, right? So if we go to CoinGecko and pull in Helium in the last, if you bought Helium at the bottom, it's done a 50x return, right? But so it launched on the 17th of 2020 in April at 17 cents and was flat. It went up, dipped, went up, dipped, right? So my perspective is every investment I'm getting into, there's going to be a bear market. That's something that's inevitable. And to make things even easier, just imagine Bitcoin. I think all of us in crypto are very, very bullish on Bitcoin and very bullish on Ethereum. And we think this is the future of money. Now, do you plan to sell your Bitcoin? If you're bullish on crypto long term, I think it probably makes more sense to just be a hodler, right? Because imagine people who got into Bitcoin in 2013 and they've hodled since. Now imagine being in Bitcoin at $10 or $100 or even under $1,000. Those hodlers, I mean, that's kind of where the whole crypto millionaire thing comes from, right? Because people were early and they hodled. So for me, I view myself more as a hodler. Now, I mean, I don't get me wrong, I do cash out, but I'm cashing out to buy something tangible. I'm not cashing out to try and buy the dip. That's not something I might get into more, but I'm not really a trader. But maybe once we launch our visual trends indicator, maybe that will change. But for now, my perspective is this: if anything, you should be buying during bear markets and then taking profits during bull markets. So if anything, the best time, in my opinion, with Bitcoin or any crypto for that matter, is to buy during the dips. Buy when there's nobody there. Because same thing with Polygon. Polygon was basically at 1 cent for almost a year, I believe. If we can go through this here real quick. Polygon was basically flat for what seemed like forever. Nobody wanted to touch it, right? So if we go here, right? Polygon was on 2019, you could have bought Polygon for 0.005 cents, for half a cent. And it was at this level, basically at 1 cent for almost 2 years. Now imagine you were somebody who said, do you know what? This project is good, but I'm out, I'm leaving. Hey, that's fine. But the people who still saw value in it and stayed in, they're now well off, right? So that's kind of the mindset I have is, for me, if there's a bear market, I would say I plan to hold. I mean, something would have to fundamentally shift in the project where maybe the fundamentals have totally changed. But once I go in, I'm pretty much in for a while, right? Because looking back, the winners from the last bull run were projects like Aave, Synthetics, Chainlink. I mean, basically, I learned my lesson from Chainlink. I was in the private sale of Chainlink, but at the lowest price, and I got out at a 5 or 10x, saying, you know what, Chainlink is done. I'm out of here. All right. and the rest is history. Chainlink bounced back and now became a top 10 market cap coin, right? And it's now, I would say, one of the pillars of all of DeFi. So my analysis was right, but I was not patient enough. And if anything, I think if you're really looking for not just 100x, but a 1000x return, I think patience is crucial, because sometimes you can be right, but not patient enough. And that hurts even more. The only thing that hurts than being wrong is being right, but not being patient enough. Same thing with SNX. I was in the private sale of synthetics. Then I pulled out because they changed the terms because they raised 30 million. Then they changed the terms to raise 45 million after taking investors' money, and I got pissed off of that. But had I been patient and not too into my token metrics at the time, I would have had a home run with SNX. So that's kind of the perspective I have nowadays. I don't need the money right now, so I'm willing to be patient. So if anything, I might even buy more on the really good projects during a bear market. Forrest, any comments you want to add to that?
Yeah, I think I agree with just about everything you said. I'm of the mind that me personally, I don't want to let a good bubble go to waste. So, right now, Bitcoin's at 60K. If I'm all in Bitcoin, or I'm not all in Bitcoin, but all in crypto right now, and we head into a bear market and Bitcoin heads down to 20K, 15K, big deal. I don't think that's likely. I don't know if we'll ever see another 15K Bitcoin, but I made sure that I got in early enough that that's not a big deal if that happens. And I'm also okay with the risk. Even if I didn't get in early enough, I'm okay with the risk that comes with being in crypto, because I believe crypto is just going to continue to grow, and it's the place to have your money right now. Again, not financial advice. I'm okay with that risk. Now, if we see this bubble go exponential, and over the next 2 months, Bitcoin goes from 60K to 120, 150, 180K, I'm not going to take profits there. I'm absolutely going to take some form of profits. And if there's a dip, I'll buy it. And then just like Ian said, in a bear market, that's the time to accumulate. That's when I'm dollar cost averaging in, even to some of the bigger coins, even into Bitcoin and Ethereum. In a bear market, phenomenal time to dollar cost average in. You could have dollar cost averaged into Ethereum between $300 and $100 for just almost 2 years. There were multiple opportunities within the last 2 years to buy under $300 Ethereum. So yeah, bear market is accumulation time. Bull market is profit taking time.
Bill, what do you think?
It's amazing how many people are talking about bear markets with the market rallying the way it is. So I realize that it's kind of a dream now that the market's moving higher, that you bought it when it was at zero and no one liked it, and then it went to $40. I was in the bear market of 2018. I was an analyst when Bitcoin hit 3,000 and something. And it was so depressing to get up and go to work and look at your screens. Now, yes, it was cheap. Yes, we did buy some, but bear markets are awful. By definition, they don't call it cheap markets to buy the dip. They call it a bear market, which is a giant furry animal with sharp claws and teeth for a reason, because they will get you out. So when the market is rising, if you're in altcoins and you're not a millionaire and you've done well, pay yourself. You can keep part of your position if you have a belief that this coin is going to go up forever. But this idea where people are dreaming of going back to 2018 and being able to buy everything for zero, it's almost like they can't wait for the next bear market so they can buy. It definitely does not work that way. Frequently, when you get those type of bear markets, those people are selling the bottom. So here's a tactical way to proceed. If you own a bunch of altcoins and you get a very decent profit, feel free to pay yourself and take at least half of your profits. If you want to leave the rest of it in what we call a moon bag, that's fine. Then if it goes to zero and you want to buy more, you're okay because you paid yourself on the way up. You're not panicking and selling out of frustration. Now, the more likely scenario is that the market goes up a lot and then consolidates in a wild range. Okay? And you're like, well, that's no big deal. A range is not a problem. Oh, yes, it is. Because when you're at the bottom end of a range, especially after a big rally, it looks like it's going to zero. And you're like, oh my God, I've got to get out. And then as soon as you sell, it goes right back up again. It gets to the top of the range and you're like, the bull market's back. I'm going to buy. And then it goes back down again. So ranges can be very destructive to your P&L if you haven't taken at least some profits on the way up. A giant range will give you huge dips that will allow you to get involved. So it's not like a bear market per se where everything goes to zero, but it might be like a half off sale at a department store. So when you're right, pay yourself, hang on to what you love so that you can manage your head. Because what I tell people in crypto, your best asset is your head, your mind, right? So you got to protect your capital, but you also got to protect your mind so you can make good decisions when the time comes.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.